Hey guys, what's cooking?
Hello, we're back again.
We're back again, and we're here with the Morins.
Good to be back.
Dave Morin of the Moors, and Sam and Jessica Lessin of the Lessins.
It's hard to conjugate an S.
It's hard to conjugate an S. Well, we're back for another week, and we have an experiment here because Sam and I are in a hotel room at a fancy secret conference, and I am in the bedroom and he's in the bathroom, which if you can see the marble, for those of you on video on YouTube or Spotify, if we can get Spotify figured out, but that's another point.
Maybe some of those YouTubers that can guess any location in the world can try to guess where Sam is.
I don't even know where you are.
I don't know. That robe has some sort of crest on it.
This is a pretty generic fancy hotel bathroom. Let me tell you, interns get the bathroom.
Well, it's been a week, and we've had several days of talking about the future of technology and investing, and of course AI. So the juices are flowing. But we've got some good topics teed up for today. For all you listeners out there, and thank you guys for continuing to listen and for all the feedback. We're so excited.
Except for the feedback that I swear too much, which some people have brought up to me, including my brother. And I would just like to point out that...
Own it, Brett.
Well, here's what I'd like to say.
Please. You have the mic.
Thank you. I do have the mic. I was not a swearer up until I met Dave Morin. And this guy swears like a sailor. And I'm pretty sure he influenced me to be the swearer I am today. So if anyone out there is listening, wondering, why is Britt swearing so much on this podcast? It's Dave's fault. It is your fault.
Why is
there
Britt
you go.
Fucking swearing so much?
Why am I fucking swearing so much?
Why?
It's Dave's
fault. And I
fault.
gotta say, Sam, no one's going to be out there saying you're swearing too much. So let's all ponder that and move on before we.
That's
right.
right.
They might be, but I just would never read the feedback. So who cares?
Sam,
I did think it was funny that we have to categorize the podcast as explicit. Which
You're welcome.
18 plus.
Yeah.
Thank you. It's all Brett.
That means I can talk about AI porn all I want, right?
Yeah, you can. Absolutely.
We're going to need a whole separate series on your favorite topic of AI porn. So I'm going to sandbox that from today's conversation. But I'm sure we'll get to AI at some point. It's like you have to drink when either we say AI or Sam says, I told you so. Those are the two drinking games of more or less. But there's a lot. It's been a sort of a slow week to start. We had Juneteenth and to celebrate and recognize on Monday.
Is Juneteenth the 13th? Is it just, or any teen day? Like, what is Juneteenth?
It's June 19th. Sam,
19th.
I encourage you to go learn more about it. It was declared a federal holiday a couple of years ago. So I hope you took it off.
Sam knows this, and we did take it off, and we did talk about it. And also, Sam, just be clear, always ask me, like, what day of the month is Thanksgiving? Like, so Sam,
is it the 25th? I don't actually know.
To be fair,
I don't know any dates of anything. I don't even know what time it is most days.
I feel the need to explain that for people who are, to contextualize Sam Lesson's question about Juneteenth.
Well, it's very confusing because Juneteenth could be one of like many different days. Right?
Yeah.
It's not very specific.
Fair. Talk to the rebrand committee.
Yeah,
okay.
It's just talk to the neurodiverse individuals over here that can't understand time.
Okay, guys, we're going to jump in and we're going to talk about antitrust. And I think this is an important topic because it does not just affect the big companies who are being potentially sued by the governments left, right, and center, but increasingly also really affecting the venture and startup ecosystem because if there are no IPOs and there are no exits, there are no returns. And, we've had a kind of slew of news just to get everyone updated on this related to antitrust. On Wednesday, the FTC went against Amazon for potentially deceptive practices around getting people to subscribe to Prime. I have a lot of thoughts about subscription practices, but is an interesting case, not, of course, related to very specific, right? But they're coming out specifically.
But like, can I start with this? Like, why would you not be subscribed to Prime? It's like, it just seems ridiculous. Like, why, what's deceptive about it? It's just like everyone's subscribed to Prime.
Well, we're going to get into opinions on all this, but I want to set the table here for people and for our listeners on what's happened, right? So we've got FTC coming against Amazon for this. They are also, just to remind people, they have sued Meta. As I mentioned last week, we've got DOJ, Google trial slated for the fall. We also have, and I think this happened maybe Tuesday night, first reported in the information, that Google has complained to the FTC about Microsoft, saying that Microsoft is too powerful in cloud computing, which is quite unusual. These companies say this all the time behind closed doors, but quite unusual to kind of say it publicly. And then we've also got more news that Adobe's Figma deal, which was a huge deal when it was announced. I remember Sam and I are like, jaws dropped. We're like, oh my God, Figma is selling for like $20 billion to Adobe. Like, they got that one in before the market crashed. Maybe not. We now have the EU saying that they are launching a long investigation into this. And there have also been reports that the DOJ, I think, might do something in the US, although they haven't yet. So I'm curious what everyone kind of thinks about, like, what's happening here and what is it? What are the kind of trickle down effects? Silence.
I mean, look, is any of this stuff that surprising? I just feel like this is the constant tug of war, and it's the government needs to have its sense of pound of flesh and have good headlines about how they're being active and involved, and tech companies push back, and it's just kind of a never-ending war. I mean, I know there's a lot going on, but is it really an escalation, or just people are bored in the summer and posting a bunch of stuff?
Yeah. That's what I was going to say. I'd love to see like a chart of the amount of lawsuits filed against these big companies over the last 5 or 10 years to see like
up. It's gone way up.
But like, what does that mean? Way up? Is it like 20% more year over year, or like I don't know. It just feels like there's one new thing every week.
It is very unusual for the FTC to have multiple active cases related to these issues against these big companies. I mean, they're also suing to block iRobot, I think. I'm not, I have to.
Aren't they just looking for wins? I mean, I feel like the reality is like, we're just at this part of the cycle where like you've had a bunch of people appointed. They haven't got anything done. We're about to go into a new presidential cycle. People want headlines. They're just kind of going for any pound of flesh they can possibly. I mean, I think this is clearly what's happening in the crypto space, where like, they're just like, fuck it, let's throw the kitchen sink.
Yeah, I was going to say, it seems very similar.
Because everyone's going to get turned over at some point on their appointments and like their positions, and no one's gotten anything done. And so it's kind of like a YOLO, let's just throw everything at everything. Again, I don't think it's good for the tech world, to be clear. I don't think it's like pleasant, but I think it's just like a cost I think it's just kind of a cost of doing business at a certain scale, right?
Yeah.
The downstream effect is a cooling effect. I mean, you and what's really unfortunate about it is that the cooling effect lasts over many years, right? Well, I mean, we're talking 5-10 years, right? Where you end up with a situation where there's entire categories where the seed stage venture capitalists and entrepreneurs are choosing not to make bets in certain areas. We talked about this as it relates to crypto and Coinbase. That one's way more obvious. I think the best case is one where we'd all be happy that the FTC was doing something, because we'd see, part of the ecosystem potentially unlock for more competition. When I saw this Amazon thing happening, I didn't know the content of it. And I was sitting here going, oh, cool, maybe we'll end up with a better, more competitive commerce marketplace here. But then it had nothing to do with that. So
maybe, I mean, I guess the thing for me is like, I actually don't think any of these really big cases have any real impact on the seed stuff. Like Figma, whether or not it gets done, great fucking deal. Every VC that was early in Figma is raising tons more capital based on their involvement in Figma, and it probably gets done, and even if it doesn't get done, whatever. Like, I don't think it really impacts the early stage market. I think what does impact the early stage market, and I think everyone acknowledges, is that because of some of the antitrust sword rattling, big companies don't want to dick around with small acquisitions because it's not worth it. And so it's not about the big iconic stuff or any of the big iconic things. What it is about is like the acqui-hire market is dead and not coming back. and the middle stuff doesn't get acquired. So basically, as a seed investor, you now have to actually play for real wins. You can't be like, it'll probably work, but if it doesn't, no worries, because there's like 6 other exit routes for this company, right, that are like fine, right? And
that's a big change.
To be clear, that's what I meant by cooling effect. You end up with this turducken of problems that go all the way down the stack because of this.
I just don't. I mean, I think like to me, it's like I think this is a tiny part of why the acquisition market is dead. And as a result, like if you're a seed investor, you have to be playing for serious wins of companies that are really going to generate a ton of cash flow and be important and survive on their own, right? As opposed to it being tuck-ins. I'm not sure that's bad or good, but I don't think any of this stuff is like a direct impact. I think it's more just like people don't want to acquire. It's not worth the pain to acquire small things, right? So it's more like what was the CRM that Facebook acquired and just had to get rolled back out?
Well, they just had to sell it.
Well, for like $1, they sold it for like nothing back to the investors who had sold it to them. And I can't remember the name of it, but it was a good piece of software. I remember playing with it. That's the type of stuff that I think has much more of a chilling effect than Figma, right?
No
or than
question.
like, an FTC case.
But don't you also think that there's a different tier of non-FANG companies that will be rabid for some M&A, especially in the AI space? Boop, you could drink over the next 5 to 10 years. Like, I think a lot of companies will fall further and further behind outside of like technology companies. Like, I'm talking like non-technology companies that are already behind in technology.
Like Safeway? You're going to like sell an app to Safeway?
I'm not saying sell an app. I'm just thinking like they have to like innovate or die, right? Like there's some premise that like these companies that are already behind are going to maybe get further behind because of what's happening in AI and innovation over the next 5 or 10 years.
I think if we look at how technology has disrupted big picture, I think that we're shifting from the concentration of disruption happening within startups to it being more spread out, and the bigger companies also getting technology enough to innovate more. I mean, the classic example here is like Disney Plus, right? Like they figured out streaming. They haven't really figured out the business model entirely. So I don't know. I think that the trend is that the startups have relatively less of an advantage because these new technologies are coming and they may start in the startup world, but they're easier to adopt, and software engineers are getting smarter and so on. So
I think the whole AI space is going to be a very YOLO space where like almost everyone dies and like the big companies win almost everything. And there's going to be some exception. Someone's gonna make a fucking fortune somewhere that's going to be super hard to predict. And like, that will definitely happen. But I don't like, if apps was not a YOLO space, right? Like mobile apps, there was tons of places to tuck them in, tons of ways to acquire them.
What do you mean exactly by YOLO, Sam?
Well, it's like you either are going to have a $10 billion company or zero. Like there's no middle outcomes, right, for these things. And like, I think almost everything's a zero. There's going to be no easy offboard where you sell it anywhere, right? Because the big companies, I think the antitrust thing does hurt in this one place, but this is not worth it unless it's really important, just emotionally. And then I think, like Safeway might buy your shit, but they're not going to pay very much, especially if VCs have paid $300 million for your seed. The economics will just Safeway can't afford that deal, right? Like there's no economic deal that works.
Yeah, to our point last week, especially if VCs have incinerated, $75 million of your seed into chips.
Just as a follow-up to that, the Information just had a story on a $1 billion AI fund from Nat Friedman and Daniel Gross to provide H100 like clusters to startups. So talk about just insane kinds of things happening. But to wrap up on antitrust for a second. So maybe it's a so-called nothing burger and we all expect it. But for VCs, eventually LPs have to get their money back. I mean, to say that like it's okay because it's just such a sterling investment because look how cool the product is. Like at some point, you guys have to like cut some checks back to your LPs. And
we've done that.
Okay,
believe it or not.
Good job.
True.
Yes.
Cash money.
You do. And like
is doing distributions.
You had some exits to be able to do that. But like if the exit market is super, super dry, like I don't think who's in Figma, Sequoia, Andreessen, like everyone, Greylock, I think.
Index.
index. They just like wanted to give some money, because again, they're not going to get into whatever carry thing until they do that.
Goldman Sachs will structure something for them where they get 80 cents on the dollar back at the 20. I mean, especially for Sequoia, because those guys come up with all sorts of fun games. But like I obviously at some point you got to return capital, and obviously at a higher interest rate environment, the next dollars that go into venture and how is hard. But the reality is, here's the reality of venture, is it is still for LPs a FOMO driven game too. Right. And so the FOMO driven game is like, if you just backed the team that got you into Figma and the on paper mark is enormous, and if the deal goes through, you get a bunch of cash. And if the deal doesn't go through, you still have something that is marked at a super high number and like it's a great deal. Like no one doubts it's a great thing to have venture invested in. You're not going to like walk away from that allocation in most cases, because if you do, you're just terrified that you're going to miss the next big return, right? And so to the extent that over 10 years or 20 years, people are just like, it's not worth it. I'm burned. I'm out. Fine. But I think it's a much longer term, slower game than you might think, right? In terms of how these things compound.
We've been talking to, 100 investors and LPs for 2 days or whatever. But I don't know. I mean, I think that they're also not all LPs are equal. But I didn't mean like good or bad, but they have different. Pension funds have different. You guys can rank them in a future pod.
Oh,
but I don't know. I think that there's just a the funds have to be very nervous about getting some cash back to these LPs. I think
not short term. I don't think they are short term in terms of getting cash back. I think mid to long term, yes. I think the gajillions of seed investors with subscale funds should be terrified about raising their next fund, right? Like I think there's a bunch of fear, but I don't think it's the Figma investors. Like it's not like the mainline guys. Like their funds might get bigger or smaller, but like it's such a long-term game. Now I think as an LP, here's the question: is like if you want to play AI, don't you just buy Meta stock and Google stock and Microsoft stock? Maybe Nvidia stock. That one's a tough one.
Might have missed it already.
Right?
Yeah, exactly.
But like that's a little bit of meanie for most LPs. But like they're just, the question is venture the right way to play these things, especially with the
question.
And that is a big question. I don't think it makes the venture allocations go away, but your balance of public equities that are obvious, right? Versus taking the stratospheric crazy bets, I think is challenging. And then even within the bets, there's like a very big difference between late stage and early stage investing and the return profiles and the timing. When we go early, like we're the first money in, it's going to take us the longest to return anything, right? That's just how it works. Versus, if in theory the IPO market opens next year, right? Like there are probably a bunch of opportunities you could pull now and get liquidity back reasonably quickly, right? It's very different. The private investing world is very diverse in that way.
Yeah. I agree. I agree that, there will be a time where the IPO market reopens. I think that, PE, maybe we were debating this a little bit off thread, is like seemingly interested in the deals that they can swipe up now. Again, is not to the favor of a lot of VCs because the multiples aren't great. And then there's the rigor of a lot of these, especially growth stage companies, just trying to operate as profitably as possible to figure out which direction they are going. So I think there's like a lot of companies that are just trying to operate off their own cash flow. Again, we don't know where the exit is. But I go back to, I just don't think like the big five is, I know that they account for a large amount of M&A, but like just think about like health tech. Like there's so many different acquirers in that space and other subcategories that I think are really interesting that will probably continue to stay warm over the next 5 or 10 years there could be.
But just to push... Maybe, but like I'll give you, without naming names, someone made a very interesting point yesterday, which is the reason you acquire things and go into other markets or expand what you're doing is because you run out of space in the market you're in. And so the irony is like if you think about like take a lot of these health companies or whatever, it's like anyone who's healthy, the market's fucking huge. AI will in general expand their efficiency and what they're able to do ideally, right? And so if anything, it becomes profit from the core, double down on what you're already doing, which makes other M&A and weird opportunities less attractive, right? So like the more there is to do because of new tech and the core of what you do, the more it's like, why would I bother other weird shit, right? And so I just think like the people who are good are going to double down on what they do. If you can double down on what you do and be profitable and survive and build, good on you. But I think the idea that people are going to be super acquisitive in the next period as private companies or public companies or big companies or small companies, I think the answer is generally no, right? It's either like you'll survive on your own or you'll die on your own.
I made the mistake of in the information's briefing column predicting a bunch of M&A maybe a month or so ago. And I was doing it because I thought, okay, companies that were sort of holding out because they thought they were worth X or could get X would finally come to terms that they weren't, and then there would be deals to be had. And a very well-known public CEO, a software exec, forwarded me the column instantly and was like, no freaking way. Like, there is just, you can't get these deals financed. There's still a huge spread between sort of what the companies want and what they can get, and you just won't see it. So since then, every time there's been some M&A or rumor, I send him the article, and every time the deal falls apart, as it did with TPG buying out New Relic, he sends it to me back. And so unfortunately, he's slightly ahead in this, but I think there is an exception, which is, I think we're going to see a lot of attempted like roll-ups of similar companies that kind of like aren't strong enough to themselves be an acquisition target or an IPO candidate. I think we'll see a lot of that in our next topic. So this might seg to like the creator economy, just as sort of one example. But
yeah, I just think like it's like usually with these things, those roll-ups, every once in a while, it's intellectually a great idea. Like, as from a strategy perspective, it makes sense. But in practice, it never works. And like, all the media. Think about all the media roll-ups. You're like, you take two bad businesses.
How many people called you?
How many times did I either try to roll up or someone rolled me up, and it was like just roll-ups everywhere in digital media.
One plus one equals -5. Right?
By the way, it's hard enough to do one integration of one acquisition, much less like 5 all at one time. Like, it's just crazy.
Yeah, and BuzzFeed rolled up these things, and now they're trying to sell them, and then I think it's, Dave, you had a point.
I think there's a interesting counterpoint here, which is that I think we all agree that the AI thing is a big thing, and we could talk about all the reasons for that. But I also think that people's exuberance around this is far exceeding what is possible with the technology today. And there is a theoretical future where your ability to create a lot more software with the same number of software engineers that you have today is dramatically better. And so you can be way more efficient, so you don't need to do these acquisitions. But I think the timeline is going to be longer than people think. And so there may be a little bit more wiggle room in the middle there than everybody's kind of talking it up right now. And we'll just see what happens.
Yeah.
Wiggle room in terms of M&A opportunity in the near term?
Yeah. I think people's ability to, make things happen with this stuff, I think, is dramatically overstated by the narrative right now, and that there's going to be a need to acquire teams and companies that know how to do this stuff in order to improve these operating businesses.
You just like hire a few people. Like, I don't know that like the model of acqui-hires will happen this time. I think like you'll just hire a few people. Right?
Well, if a lot of the best talent is over in startups, you may need to acquire them.
Yeah, but if those startups, maybe, but I think it's unlikely that you will, right? Like, I think the reality is, it's kind of like, you know this as well as I do, Dave, and we all know this, right? Which is like startup economics, any venture startup like massively overvalues the founder, right? Like, especially in these acqui-hire type situations, right? Just like the pie it's going to be cheaper in almost all cases to just go get the 3 AI people you need. And I don't. There was an era, I think, where for a whole bunch of reasons, people were excited to work on startups. It's still true in pockets. Like, I'm super pro startups, let's be really clear. But I think a lot of the AI engineers, the irony is, especially in the AI space, people want data and distribution, and they work with really smart people. That's a super different mix than being like, I want to start an app, right?
Yeah,
and so
if
you have a bigger company, that's why I think, again, the big companies are even more advantaged, because if you're an AI researcher or doing really hardcore AI shit, not like building apps with APIs, right? Like, it's very appealing to go work at a big platform in a way that it isn't if you were like a solo app developer, right?
No question.
And like wanted freedom to do their product thing. And so I think that yes, some places they'll need talent, but it'll be way cheaper to buy and way less pain to buy the talent than to do like asset purchases and wind downs and pay out investors like us and everything else, right?
Yep.
Yeah. Okay. Well, to be continued. A lot of things to watch, but it's high stakes. I mean, again, it's a big deal if M&A doesn't exist. So, Sam, you want to tee up your favorite topic we're going to discuss next?
Oh yeah, well, creators. So as a, hopefully maybe no one knows, but some people, at least people in the call,
Our kids are
know,
going to love
like,
this topic, actually.
well, let's talk about Mr. Beast. So I'm really into, and
Mr.
have been for a
Beast.
really long time, investing directly in people rather than companies. Right? Can you bet on a person from an early age? And say, look, I'm not exactly sure what you're doing, but if $1 million would help change the trajectory of your life and what the risks you're willing to take and how you want to approach things, let's fund the people with a long-term equity alignment deal rather than debt. Like, I've been on this hobby horse forever, and like,
How's
I'm
that
still
been
on
going?
it.
What's the news?
It's been going
What's the news?
It's been going great. I mean, we've financed several.
Meeting.
We've been financed several at Slow, several creators this way, and we can get into that and things like that. But one of the
and
things
just so everybody knows, I mean, you're making a bet on the creator themselves and all of the downstream businesses that they might create,
Everything.
right?
Yeah,
and
it's
I think that's the thing
alignment.
that a lot of people don't understand right now.
Have you woven in death rights yet since our last episode?
No, we haven't woven in death. It's actually technically a 30-year deal. If you want to get into
Brett,
it. But
for keeping us on plan.
The basic point is that which is like, you're a creator. I want to bet on we bet on founders. We bet, on spaces. If you're a really compelling person, and then specifically creators, we do a lot of, because there's a bunch of reasons that are specifically creators at this moment are a good way that it works. But the point is, here's $1 million, here's a $2 million. Your business best. You go put it where you want. If you want to do like what Mr. Beast did early, which is like light 50K on fire because it is a great, efficient way to drive views, go for it. Right? Like, it's your money. You kind of look across your portfolio and optimize. There's a whole other philosophy. This is a little bit avant-garde still. What isn't avant-garde, or at least hasn't been recently, is like what Churn and a bunch of other people doing, funding holdcos, which is somewhere in the middle. And there's a other set of investors who are like really into creator-driven businesses. And we've always been in the camp of finance the holdco, finance the creator holistically. Do not finance single projects of the creator, because for two reasons. It's bad for the creators, and it's bad for you. And I think Mr. Beast just had this instance where there was a much typed thing about how he had started the quickest growing restaurant chain ever in Mr. Beast's Burgers. And it was this amazing company of like hamburgers, and McDonald's was screwed because of Mr. Beast Burger. And then he just announced that he's stepping away from it and like calling it quits on it.
Was
it
like, actually a burger chain? Just so I'm clear on what the actual business was. I thought it was a cloud kitchen kind of a thing.
Well, it's somewhere in the middle. He basically was like, use my branding, use my boxes, use my recipes, you run the kitchen, But and
could I go to a restaurant?
I think it was all delivery.
Okay.
Why is he stepping away, did he say?
Because it's a shitty, hard business, and like there are other consumer product-y things that he thinks is a better business, right?
Did I read that he had quality control problems, though?
That's what he said. And that's obviously true. Services are hard, right?
Yeah.
Like I'm sure that was true. So the basic point is, he started this thing. A lot of people got really excited, being like, I'm going to fund Mr. Beast Burgers. Like, do not do that, right? And like, I think this is a really interesting, cautionary, and big profile story here.
And by that, you mean take an equity stake in Mr. Beast Burgers or in Mr. Beast Incorporated?
Well, this is it. Mr. Beast Incorporated, if you want to get a piece of everything he does and be aligned with Mr. Beast, and wherever he's skating, you think that's going to be the best alignment.
That would be a pretty good investment.
That'd be great. Would have been. It would have been. We'll see. It all depends on what price you pay. Right.
Yeah.
Sure. It historically has been.
But angel investing in that would have been great.
Absolutely. And I would have done that all day long, right? Angel investing in it, right?
Yes.
Early, right? The problem is, once everyone's wise to the jig, it's like potentially not at all a good investment. But the basic point is like that works. What does not work for investors is going into the single line businesses. I mean, and there's been other examples of this is so high profile. It also doesn't work for Mr. Beast, right? I think this is a really important point to make for creators is like, do not finance your one-off projects this way, because if the reality is you get in a very awkward position if you have a bunch of investors in Mr. Beast Burgers and you're like, oh shit, I should spend all my time and effort and social capital and distribution on something else, right? Mm-hmm. Alignment is key, right? And so for me,
unless I suppose you're well communicating this, right? Like if you kind of, as a creator, said to your followers, I'm going to do many, many businesses. This is just burgers. I might also be in energy drinks and these three other things. Like, know that you're taking the risk that I might move my attention.
Sure,
I'm a creator that named a company after myself. So can I just jump in here? Yeah. I think I agree with a lot of what you're saying, Sam. I think the only thing I'll say is when I started Brit & Co. And I got the question from every investor, but you're Brit, what if you die tomorrow? What if you want to leave? What if you want to shut it down? I definitively answered, and with true honesty from the very beginning, like, I don't see this as building a company with my face on it and forever. Like, I believe that Disney was started by a guy named Walt Disney, and today you think of Disney as something totally different. And Hershey's and Rocket, just because you're using your name in something doesn't necessarily mean that your likeness has to always be attached to it. And so I do think there could be a successful business of like Mr. Beast Burgers that isn't necessarily tied to his likeness, but is just a really good product that can, and maybe I wouldn't actually invest in a burger service restaurant company, but like there are models where that has worked in the past.
Well, I think so the caveat I would give, though, I think this is really important, is if your calculus as an investor is this is going to see because the continued distribution involvement of Mr. Beast, for instance, that is one set of bets, which I think is a check that you should not write and Mr. Beast should not cash. Right. Yeah. If it is, I am doing a one-off spin up, the IP goes in, you're going to get 5 tweets and then we're done and we all know what the deal is. That's fine. But I think the problem is these brands, even things like Goop is my understanding, although I'm further away from it. Like they're so dependent on the continued distribution and of the the entire advertising budget or whatever is like the lead racehorse. Like it is the personality.
I love Goop. I went to the Goop shop yesterday.
I think Goop is less dependent.
I disagree. I disagree on Goop.
It is now, but my understanding, and someone can debate me on this. My understanding is that
Goop is in our book, by the way. So
am I thinking of the Honest Company? There's one famous.
You're thinking of Honest Company.
Honest Company.
Honest Company.
Bad brands.
But the Honest Company is a really interesting story. Where like, who is the Honest Company person again?
Jessica
Alba.
So, he is Gwyneth Paltrow. There's some story I've heard with one of these where basically the brand
that way and it transitioned.
Well, the brand was like was launched and it was interesting. The famous actors lost interest, was doing their acting career, it sucked. And then the second they ended their acting career and started focusing on it, it was like crushing, right? And the basic point is you're too dependent on an uncorrelated asset, effectively, right?
I know a lot about that business, and I know I know the founder of that business very well, and I can tell you, like there was a different CEO in the game, and it was just not run well for a while. And it's not necessarily that it was because of her involvement that she came back or whatever. It's because there was like an actual leader.
Maybe.
What about like Ryan Reynolds, like vodka, like aviation?
I love Ryan Reynolds.
Ryan Reynolds is like crushing this.
Why are there so many tequila brands? Can someone tell me what the TAM of the tequila market is? Because there's like 80 tequila brands that are. It's crazy. Like, is it
110% gross margins.
But you guys, guess what?
Gross margins.
110%.
The George Clooney tequila brand is a case in point for what Sam is talking about and what we're actually talking about here, which is that. Sorry.
What is it called? Casamigos.
Yeah, and who did they partner with straight out of the gate? One of the founders of Discovery Land Co. And so they built a brand with both a celebrity and a serious distribution advantage. As soon as they had the tequila, they put it in every Discovery Land Co.
And tell our listeners what Discovery Land Co. is.
It's a real estate and I don't even know how to describe it. Like a real estate company that has resorts like the Yellowstone Club in Montana.
Very high-end private resorts,
and Hawaii, all over the world, right? And so they sell high-end real estate. They've got many, many bars and restaurants and things at all these places. And so as soon as they had this tequila brand up and running, they were able to stick it in distribution all over the country almost immediately. They've got lots of high-end clientele coming through that then want to take it and put it in their restaurants and all these things. And so, you had a distribution advantage that was not tied to just the creator.
Look,
right?
I'm all for like people using their influence to like boot companies that are like off to the side with real teams and blah blah blah, and they have minority shares. I think the second you go into like, I'm a creator, I'm making this bet, you want to be aligned with the creator. You do not want to be aligned with the individual bets, both as the investor and because look, as the creator, I think it's really key that you don't end up in these weird situations where you're like, I finance this thing, but it's actually not the best thing to spend money on anymore. I actually should be spending money and time on something else. Like you want the whole point is you own an audience and you own a brand and you should manage it to the best of its ability, not what you happen to raise money for.
Sam, why aren't these creators carrying small angel funds then?
Some do.
Yeah. I haven't heard a lot of that going on, but that to me would make a lot of sense too, where the creator kind of carries a fund of some some composition along with the operating co that you could allocate capital into all of their projects.
Also, like Mr. Beast still has Mr. Beast chocolate, right? He still has
Feastables. But interestingly, I believe, isn't that called Feastables? And like that's interesting because like that isn't actually branded that. Like I actually think Feastables is like a better example of like, you know, and I wonder what the deals look like there and whatever. It's like it's interesting that his version 2 on that is actually it is not Mr. Beast's chocolate, it's Feastables, right? And like it's a little bit of a tweak.
It's Feastables if we're getting specific about it.
If we're getting technical,
we're getting very technical.
Like it shows that chocolate sells.
My favorite story. Do you know about this?
Good. It's really.
Do you know about this thing with this where like he made some comment and all of his followers were like taking Hershey's and stuff and like hiding them in the Walmart so you could only find the Mr. Beast chocolate. It's like it's like wild, right? Like these influencers are like have real influence, right? At least in their populations. I just think it's like
Chamberlain coffee that I've going through. We interviewed the information at Cannes. We're not on the Riviera, sadly, right now, but. Interviewed Emma Chamberlain. So that's the other one that is mentioned in the same breath as Feastables.
Seems like no one's on the Riviera. That's an interesting trend.
Yeah. I wired my first money for a yacht, guys, because we had a party on a yacht at Cannes. Sadly, I missed it. But
that's going to get clipped. That's going to get clipped somewhere, Jess, and go somewhere on the internet. So I hope you were proud of that statement.
Texting me, it's like, it's too windy. It's too windy. I'm like, why did we rent a yacht?
Oh, man.
In partnership with Roku. Go Roku. I heard the event was fabulous, but I was like, oh my God, is this a thing? This is what people do.
That's what people do in Cannes.
So, Sam, is there a conclusion? Okay, so like in summation, what kinds of
finance creators in verticals that own their verticals, you know what the products are that come out of them, bet on people, bet on the community, do not bet on Mr. Beast's burger joint. It's not that exciting.
Yeah. So,
although I will say that Dave said something else. My real conclusion on this is I'm actually super interested in financing services or like that have creator underpinnings, which we can get into. They are very hard. But I'm really into like small business franchises, and I actually think there's a really interesting world that exists in. But that's like an in-depth special edition podcast versus this one.
We could go deep on that one.
Okay. More or less pro. I love it. Okay, good. Guys, are we almost at our lightning rounds? And thank you all for feedback. You liked the lightning round, so we're going to try and streamline them a little bit. Dave, I think it's over to you for this week's.
This is not more or less. This is lightning round. Yeah.
I kind of think they're the same.
Is this one thing we learned this week? One new idea?
Let's do that. Let's end with the one new idea so I have time to think about it. So Dave, start. You wanted us to kind of weigh in on a development.
I thought, there's the big cultural news this week is that Pharrell Williams, stepped out with his first fashion show in Paris. I think it was yesterday, as the creative director of LVMH. And LVMH has been much talked about over the last many months for, a bunch of different reasons. Not the least of which is their, succession planning and all of this other fun stuff. But I thought the most interesting thing was that the aesthetic that Pharrell showed on the runway, as soon as I saw it, all I could think of was Minecraft. And I found it just kind of fascinating, actually, that he's got this like voxel pixelated fabric thing that they're doing. I mean, it looked like these models were not only walking straight off the Minecraft screen, but even the fits of everything looked like Minecraft characters. I mean, huge baggy fits with like pixels. And a lot of people were comparing it to CryptoPunks and things, but to me, it looks identical to Minecraft. And the more I've kind of dug into it a little bit today, but it seems like everybody agrees. So I just kind of think it's interesting and fascinating that Minecraft is transcending to the LVMH Paris runway. Like that's like a very interesting crossover.
It's like Microsoft.
Is that just like top of mind because our two children are obsessed with Minecraft? So you're seeing Minecraft wherever you go. It's like confirmation bias because it's all over our house right now.
I think a lot of parents. Sorry, Jessica.
No, I'm sure that's a factor. But so, okay, are we more or less saying the trend of like Minecraft infused fashion, or also like Pharrell celebrity infused fashion?
I think it's more like
the tech.
It's like the online world infused fashion. It's like really crossing over. I don't know. I found it a little bit strange.
I am more for Sam and Dave trying this trend out and taking a selfie together, and less for Jess and I trying this trend out.
Yeah,
I am not for anyone doing this. And
Sam wore a collared shirt last night.
I'm much more into the opposing trend, which is the whole less logos, less trend.
Yeah, Dave, are you wearing like a Chanel hat now?
No, this is actually this is a hat called Lift
It's a Succession hat. It's a Succession hat.
Indeed.
No, if it were black, it would be.
No, this is not a Loro Piana hat. No, this is a different brand.
What is Pharrell famous for at this point? Like, who is Pharrell?
Because I'm happy.
But that was like 100 years ago.
Okay, but also so many other things. Yes, there's so many songs. He's a producer. He was on The Voice. He was also an animated voice. He's an incredible.
Is that still going on?
Oh my God. I'm so glad that I am the representative of mainstream culture here on the show. We should have like pop culture with Brit as a segment that we sometimes
corner. We'll do it.
Exactly.
I would really recognize Pharrell, but I don't. I understand he's famous, but it's like, is he famous for the I know the happy song.
No. Oh my God. So many songs.
There's many songs that he's behind that you don't realize. He's kind of, he's like a Timberland or a Rick
producer.
Rubin
Yeah, he's a producer of many artists.
Rick Rubin's a funny person.
Yeah. We should have Rick Rubin on the pod.
Pharrell has four kids. That's crazy to me.
Yeah, the 4 Club, I just bow down in honor. Don't understand it.
It's easier when you're a guy.
True.
Right.
I agree.
Very true.
I agree with you, Sam.
We're all in agreement. What did we learn this week, Sam?
The only thing I've learned is really a recommendation, and it's based on Rick Rubin. What is the name of the hilarious rapper, Little Dicky? What's his television show? Little Dicky, look it up. Someone Google it. Little Dicky has a great television show, and the last episode of the last season is at Rick Rubin's house, and it's hilarious. And so I'm going to turn my What Did I Learn into a recommendation, which is
it's
people
called
should watch
Dave,
this.
actually.
Dave.
Yeah.
It's a niche show. It's highly entertaining, and I would highly suggest, 1, listening to the hilarious Little Dicky song with Snoop Dogg, and then 2, watching Dave. It's great.
Okay. Brett, what did you learn this week?
So I'm a Swiftie and I'm proud of it. And I would like to let everyone know that
the programming language?
combination of the programming language and the music artist. Sam, there's this woman named Taylor Swift. Yeah. She has a bunch of really good songs that you should probably listen to sometimes.
Yeah, not just one. She has a few.
And she's got concerts where like 10,000 people are showing up outside the stadium.
Basically,
and are they dressed as Roblox characters?
They might be. But this is what I've learned. Not only has she generated $5 billion for the U.S. economy so far this year, but there's this, speaking of creator economy and the trends that your fans glom onto, I just heard about this. So starting at the very first tour that she kicked off earlier this year, some of the fans started making friendship bracelets out of beads, like 90s style, that have words on it related to her songs or lyrics. And then they'd make like 10 of them and come to the concert and just start passing them out to other fans. And so this like whole like exchange of friendship bracelets has started happening more and more at every tour stop. And now people are like bringing home with them like 20 or 30 friendship bracelets like on an arm, and there's collectibles and they're trading them and they're sharing them. There's just like a whole marketplace booting up around Taylor Swift friendship bracelets. A lot of craft stores are selling out of like beads, and I just think it's like wild how this happened so organically and is now continuing to spread throughout the country.
The Taylor economy.
The Taylor effect.
It's insane.
Yeah.
It's so cool. It's so cool.
The Taylor economy or something? I don't know.
Something like that.
I don't know. It just defies description. I have a really wonky one that just came to mind, so I'll apologize for all the sort of non-IPO nerds out there. But I learned that Netflix IPO'd at a $300 million valuation. Which
I mean, wasn't Amazon down there and Microsoft?
Like
yeah, but you do have to remember that $300 million in 1800 was a lot of money.
Yes, it was. And it was amazing they had a business when they got
Inflation's
around
a
by
bitch,
horses.
right?
Yes,
It's like
I
that
mean,
was,
it's amazing. But it's just like kind of, I think that kind of perspective, I don't know, the information is turning 10 in December. And so I'm thinking a lot about perspective. And like, that seems like a long time, but like, I don't know, like Meta's about to turn like 15 or something. Like these
20,
thank you. I don't know.
2004.
Thank you. Yes. And like Google's not that old either. 25 maybe?
1999. Yeah, I think.
Yeah. So it's just kind of amazing to think. And so I don't know, like Netflix is, I think, a great company, still a phenomenal company. I don't think it's in its like waning years. And so in like relatively recent, it reminded me how much things change and how much cycles change. But yet, like, I don't know, these people are still, like, the leaders of these companies are still around and still leading and still doing things. But we've seen, like, I think for some of these early leaders in tech, they have seen so much change in a short period of time. And if we kind of extrapolate that, that's like kind of mind blowing. So I've been reflecting on that.
I like that. It's a good one, Jess.
Thanks, Britt. Dave.
So I've got one that came to mind that's kind of interesting. You know, we've got a studio at Offline where we build things, create technology from the ground up. And we've got this really interesting project around computational audio that when it was first proposed, I didn't believe it was possible. But the scientists and the experts that were working on it with us told me that it was. And so, we decided to do it. And it's around creating an outdoor sound system that can play like festival quality music in your backyard, and nobody can hear it. Your neighbors can't hear it. And I didn't think this was possible until we got the prototype up and running at one of our offices. And I was sitting there this week listening to it, and then walked across the street and you couldn't hear it. And it just was one of those moments that truly blew my mind and just made me, fall in love with what we do in this town all over again. And so I'm excited as we get that into the market a little bit more, but it's just pretty neat to see cool technology when it plays out.
Sounds awesome. Well, that's a fun note to end on. Tech is still cool. Does everyone, by the way, like who doesn't live in the Bay Area, every time they see you, ask you, like, is the Bay Area okay?
Oh, yeah.
Oh, yeah.
No, Ron DeSantis was, I don't want to get into politics, but Ron DeSantis flew in for, I think, 1 hour this week just to film an ad about how terrible San Francisco is because of all the liberal.
He did?
Yeah. And then he flew out. He was here
and
for
Biden was here
1 hour,
yesterday. I saw
out.
Biden's helicopters. I saw Biden's like Osprey helicopters flying around everywhere.
Yeah.
We'd have to do a whole episode on this.
that is pretty funny. It's like kind of like those old things where, like, you go to Africa to like help the starving children. It's like, is that what Ron DeSantis did to San Francisco?
He just came, he made a quick ad, and then he flew out.
Did he have like a 1-800 number? It's like, this is
I think he did like I'm sure he did a fundraising thing for like an hour or two, and then but
that's hilarious. But it is funny. I need like a good answer to be like, we're doing okay. I mean, neither
I
of
think
us
we are doing okay. We'd probably have to do an entire episode on everything going on in San Francisco, the city. But I think Silicon Valley writ large, I was in the city this morning, and
I did hear
it feels great.
Yeah.
I think that the energy of Silicon Valley is alive, and I think it's great.
Well, and for anyone who doesn't live there, I mean, the good news is we're bringing back homesteading. You come, we'll give you like a little red dot. You can go to any building in downtown, and you put your dot on that building, and it's yours. So, like, you just pick whatever building you want.
We'll give you
homesteading
a red dot.
2.0.
We'll give you access to H100s.
All you have to do is stay in the building for 48 hours, and it's yours.
Oh my God. Okay. Well, on that note, let's say our thank yous. Thank you to all our listeners.
Yeah, it's been super cool to get all the feedback.
Send us the feedback. Tell your friends. What else? We're now on, I think last week we added like 4 or 5 more platforms.
It's all happening.
We're trying to get the distribution out. Videos coming to Spotify. We're having trouble with that for some reason. So
we're learning about encoding videos into podcast.
We're going to make a jingle, but if you'd like
to
to make us a jingle, then you can submit it to me on Twitter @Brit, and maybe we'll play it next episode.
Yeah, we know we need a jingle, so we're just taking our time, and Yeah, thanks for
It's fun.
chatting with us, and we'll see you next week.
See you guys.
Bye, guys.
Bye.
Stay drip.
Bye.